Assalamu alaikum, dear student. Today we are starting property income. Okay. In the previous lecture, we did discuss the access of pension. Now we are starting property income. It's a very important topic. It's a very small but very important topic for both TX and ATX. Again, do not focus on this. Let's start property income. After property income, inshallah, we'll go to employment income. But first, the property income. Basically, in this property income topic, actually we are studying, or we will study, actually rental income. In this topic, we are not studying buying the property and selling them. If you buy and sell the property, you will be getting a capital gain. That's a separate topic. Right now, we are studying if you have given property on a rent, the rental income which you are getting. So what are the tax rules relating to that rental income? So for property income, for rental income, number one point is property income. PI means property income is taxable on cash basis, but accrual basis can be opted. Very important point. You can say normally the property income is taxable on cash basis. What do you mean by cash basis? We'll be discussing that inshallah in a short while. But the first point is property income is taxable on cash basis, but accrual basis can be opted. So you can say normally the property income is taxable on cash. Cash basis means the rent which we have actually received during the relevant tax year, that rent will be treated as an income, and we'll be deducting the expenses which we have actually paid during the relevant tax year. So normally property income is taxable on cash basis, but alternatively individual can opt accrual basis also. But in exam, if nothing is mentioned, then property income is taxable always on cash basis. And after maybe 5 or 10 minutes, we'll be doing one question. And in that question, we'll be doing the one question two ways, cash basis and accrual basis. Then automatically you will be getting a really good idea about the differences between cash and accrual basis. But right now, just you need to know one thing. Property income is normally taxable on cash basis, but accrual basis can be opted. Another point. If gross rent received from all the properties is more than 1,50,000 in a tax year, then only you will go for accrual basis. Then only accrual basis. Very important point. Then only accrual basis. Repeat. It is possible that one individual is having number of properties. If someone is having number of properties, then the rent received, only we are talking about the rent received, exceeds 1,50,000 in a tax year, then only that individual will follow accrual basis. So normally property income is taxable on cash basis, but accrual basis can be opted. If someone is having number of properties and the rent received from those properties is more than 1,50,000, then that individual will have to go only for accrual basis. Third and the last point is for companies, property income is taxable only on accrual basis. Okay, Now what will be the format of calculating property income? We'll take rent. From this rent, you will be deducting all the allowable expenses. Simply all the revenue expenditure which are incurred in a relevant tax year. Relevant tax year means for which you are solving the question, that tax year is relevant for you. Simply you need to deduct all revenue expenditure. For example, water tax you have to deduct. We need to deduct council tax, means property tax. Insurance relating to property. Bad debts. But a very important point, bad debts issue can only arise, you can only face the bad debts in case of accrual basis. Because on property income, on rental income, if you are following cash basis, then bad debts will automatically be adjusted, because cash basis means we will only take the rent which we have actually received. So bad debt will automatically be adjusted when you are following cash basis. So otherwise the bad debt issue can only arise in case of accrual basis. Only it arises in accrual basis. Otherwise bad debt issue cannot come. So we will adjust for the bad debts if there are bad debts, but only on accrual basis. For example, your tenant is living in the property for, someone has lived in your property for 12 months, but now he has left the property, but he has paid only 10 months rent. So in that case, there will be a bad debt of 2 months if you are following accrual basis. In case of cash basis, bad debt will automatically be adjusted because you will be taking only 10 months rent. In accrual basis, what you will be doing, since that person has lived in your property for 12 months, you will be taking a rent of the 12 months and then you will be deducting the bad debt of 2 months. So simply you need to remember one thing, bad debt issue can come only in accrual basis. Repairs of the property. Then there is another very important concept is replacement furniture relief, which I need to explain. Replacement furniture relief. So let's say you will be getting taxable property income. Taxable property income, or you can say assessable property income, so that you should not get confused with the word taxable. Sometimes students, they get confused with this. Here comes your assessable property income. Let us discuss what do you mean by replacement furniture relief. Basically, replacement, a very important point, dear student, capital expenditure, you cannot deduct a capital expenditure. A replacement, let's discuss what do you mean by replacement furniture relief. What it is. Let me tell you a little bit regarding furniture. Furniture means what? For example, if I talk about a washing machine, that also comes in furniture. Even the carpet comes in, obviously, furniture. So actually, replacement furniture relief is only available when you are replacing the furniture item. When you are initially buying any furniture item, on initial cost of furniture item, replacement relief is not available. Initial cost of the furniture you cannot deduct. Replacement furniture, look at the name, what it says, replacement furniture relief. Replacement furniture relief is only available on replacement of the furniture. It is not available when you are initially buying the furniture. So replacement furniture relief is only available on the replacement of furniture item. For example, let me explain more. For example, someone originally bought a washing machine. Washing machine costing £1,200. Assuming someone has bought washing machine costing £1,200, assuming 2 years back or 2 years ago, someone purchased a washing machine costing £1,200. So when they bought this washing machine first time, then obviously replacement furniture relief at that time is not available. Replacement furniture relief is only available when you are replacing it. Now let's say this is existing washing machine now. In the tax year 22-23, this individual, the owner of this house, has decided that he wants to replace this existing washing machine with the new one. Okay. New washing machine costing £1,800. Old washing machine is sold for £200. We just need to calculate replacement furniture relief. A very important point. We are replacing the existing washing machine with the new washing machine. The new washing machine is costing 1800. But 1800 will not be your replacement furniture relief. Why? Because this individual is spending £1,800 on the new washing machine, but he is also getting scrap value sale proceed from the existing machine of £200, which means the scrap value, residual value of existing machine, existing furniture item, actually what it does, it reduces your replacement furniture relief, and which makes sense also. If someone is spending 1800 on the new washing machine and getting 200 inflow from the old machine, so obviously the replacement furniture relief in this small example will be 1600. And this 1600 will be deducted while calculating property income. Now let me give you another idea of this replacement furniture relief. Assuming Mr. X is having an old washing machine now he is replacing existing washing machine with new costing £3,000, having dryer also. Existing machine does not have scrap value and does no and dryer. So actually existing machine is very simple. Existing machine does not have any dryer and it is also not having any scrap value. Okay. So this individual, this gentleman is replacing existing washing machine with the new advanced washing machine, and the new washing machine is having a dryer facility also. But the existing one does not have. Now what information examiner is giving you more information. Machine, new machine without dryer is costing £2,500. A very important point. This individual is having existing washing machine which is very simple. It does not have any dryer facility. The new washing machine which he bought is for £3,000 and it has a dryer facility also. Now the question is, should I take the entire £3,000 as replacement furniture relief? The answer is no. Actually, the new washing machine is not exactly identical to existing one. That is why examiner has given us more information. In this example, let's say an examiner is saying that if you buy a washing machine without a dryer facility, it will cost you 2,500. So actually, replacement furniture relief is available when you are replacing the existing furniture item with the identical new item. So in this example, replacement furniture relief will not be 3,000, it will be 2,500. And this entire 2,500 will be available, it will not be reduced because existing washing machine does not have any scrap value. So simply replacement furniture relief will be 2,500. And from property income, we will deduct this 2,500. So now I strongly believe, dear student, you should be having a really good idea about how to deal with replacement furniture relief. Let's try this question. Again, don't focus on this. Calculate Gill's property income for the tax year 22-23, assuming that he applies the cash basis method of assessment, elects to apply the accrual basis method of assessment. So that's great for us. That's a really good question, you can say, because we need to solve the question by that Gill's follows cash basis, and the same question we'll be doing inshallah on accrual basis. That will give you a really good understanding and the difference. It will tell you what are the differences between accrual and cash basis. Let's first solve the question according to cash basis, and the tax year is 20-23. Okay. Gills owns a cottage which he lets out furnished at an annual rent of 3,600. The annual rent is 3,600 payable on the 6th of each month. The rent is payable on the 6th of each month. During the tax year 22-23, he incurs the following expenditure. 1st May 2022, cost of what it says, new garage. Now, hold on. Look at the name cost of new garage. This information is representing that the cost of new garage is a capital expenditure, and while calculating property income, we never deduct capital expenditure. So this new garage is a capital expenditure. And we do not deduct capital expenditure while calculating property income. 1st June 2022, insurance from 5th July to 22 years, insurance will be deducted. Now listen and listen carefully. Actually, we are dealing in cash basis. So cash basis means within the relevant tax year, which starts from 6th April 2022 till 5th April 2023. Any revenue expenditure which is actually paid, during the tax year, that will be deducted from the property income, rental income. And only that amount of rent will be considered which is actually received. So simply, the relevant tax year for which we are solving the question, it starts from 6th April 22 and ends at 5th April 2023. So look at the insurance. The insurance is paid on June 22. Insurance is for the year from 5th July 22. So this 5th July 22, it is for the year. That is not important right now. It is the important point is this 1st June 2022. This is the date on which this individual has paid the insurance. Since 1st June 2022 falls in the relevant tax year for which we are solving the question, and he has paid 480. So the entire 480 will be deductible. We cannot time a portion. We will not time portion this 480. Now, first number 22 definitely falls in the relevant tax year. Replacement freezer is 380. When your examiner says replacement freezer, whenever your examiner use the words replacement freezer, let's say he says replacement washing machine and he does not give you any other information, then entire amount will be taken as replacement furniture relief. Otherwise, he should not have used this word. So nothing is mentioned. If you come across a question where it says replacement any furniture item, then the entire item will be taken as replacement furniture relief. On 1st December 2022, look at this, new kitchen table. New kitchen table cannot be your allowable expense because, and it is not your replacement furniture relief. Why? Because it is new kitchen table. And we did discuss in replacement furniture relief. Actually, replacement furniture relief is only available on replacement. Replacement furniture relief is not available when you are buying something new. it is not available on your initial cost. And look at the wording, what it says, new kitchen table. So since it is new kitchen table, you're not replacing, actually you are buying a new kitchen table. That is why replacement furniture relief on this new kitchen table is not available. 1st March 2023, redecoration cost 750. Okay. The tenant was late in paying the rent for March 2023. Gills receive a rent on 6 April 2023. Very important point. Tenant, instead of paying the March rent in March, he paid on 6 April 2023, which means that he did not pay the March rent. He paid the March rent on 6th April 2023. Logically, instead of paying within the March, he paid on 6 April 2023. Since the date 6 April 2023 does not fall in the relevant tax year for which we are solving the question, actually we are solving the question for tax year 22-23. And this rent date 6 April 23 actually falls in the tax year 23-24. That is why when we'll be solving this question on cash basis, rent only for the 11 months will be taken, not for the 12 months. Because in the last month he did not receive the rent and we are following a cash basis, we are not following the accrual basis. So only 11 months rent will be taken. So Gills. Let's see. Gills, and we are following cash basis. Rent for the entire year is 3,600, but we'll take only 11 months. Because the last month rent was received in another tax year. It comes 3,300 rent. Insurance was paid in June and 22, and June 22 falls in the tax year 22-23. So insurance amount will be deducted, which is 480. And there's a replacement freezer. Replacement freezer. What was the amount for the replacement freezer? We have to check. It is 380. I think there's no other allowable expense. Let's read the question. It is new kitchen table. That is why replacement furniture relief on table is not available. Let's read for the redecoration. Point number note 1 is done. Note 2. The insurance for the year 5th of July 21 of 420 was paid. We will deal this point number 2 very, I would say, in a proper way. We'll deal in point number 2 in accrual basis. For cash basis, it is irrelevant because on cash basis, we just see one thing. If revenue expenditure is actually paid during the tax year, that will be deducted. So 1st June 2022 falls in the relevant tax year for which we are solving the question, and they have paid 480. So that is why we deducted that. The redecoration cost is a revenue expenditure incurred on 1st March 2023 but not paid until 1st May 2023. So 750. This redecoration cost is accrued on the individual, but actually this 750 redecoration cost was paid on 1st May 2023. And logically, the 1st May 2023 does not fall in the relevant tax year 22-23. Actually, it falls in the relevant tax year 23-24. Since the redecoration cost was paid after the tax year 22-23, that is why 750 will not be taken in cash basis. So simply here comes the property income, straightforward. Property income. Let me use a calculator. 3,300 minus 480 minus 380. Property income, I'm getting 2,440. Now, let's solve the same question on accrual basis. Gill's question on property income on accrual basis. Number one difference. We are solving for the tax year 22-23. Now listen and listen carefully. 31st March 23 rent was received on 6 April 2023. Even though the last month rent was not received, it was received after the tax year. But since we are solving on accrual basis, it means if your tenant is living in the property and is not even paying the rent, and even you have not received the rent, but still that rent is treated as an income on accrual basis. Because if your tenant is living in the property, so even he has not paid rent to you, but it becomes accrued. So obviously, if someone is living in my property for the 12 months, then I'll be simply asking rent for the 12 months. So even though I'm receiving some of the rent in the relevant tax year, and let's say some of the rent I'll receive in another tax year, but still on accrual basis, the entire rent falls in the tax year 22-23. So first difference, rent will be of 12 months, 3,600. Now, another very important difference, replacement furniture really will remain same. Replacement freezer, which is 380. Replacement freezer is 380. Now, another very important point which we need to discuss in this question on accrual basis is, look at this redecoration cost 750. Since this redecoration cost was incurred on 1st March 2023, which falls in the relevant tax year 22-23. Even though the redecoration cost was paid in the next tax year, but since we are solving the same question on accrual basis, since this redecoration was incurred on 1st March 2023, it means it is accrued on this individual. Even though the 750 was paid in another tax year, but still it will be treated as an allowable expense in the tax year 22-23 on accrual basis. So redecoration cost 750 will be deducted. Now you can see the differences. Redecoration cost. Now a very important point, redecoration cost comes on insurance. Very important, insurance. Basically, for when you are solving the property income question on accrual basis, then you have to time apportion the insurance, because normally insurance is paid for the 12 months. Since insurance is paid for the 12 months, so you have to time apportion the insurance, but only on accrual basis. Because we solved the same question on cash basis, we did not uh, time apportion the insurance, but on accrual basis, we will time apportion. Now listen and listen carefully. Look at this point number 2. The insurance for the year from 5th July 2021 was 420, paid on this date. Leave the paid date. Important point is this insurance covers starts from 5th July 2021, ends for the year. The year will be counted from 5th July 2021. Let me explain the importance of this 5th July. Basically, from 5th July 2021, if I go to 31st March 2022, so obviously from here to here there are 9 months. These 9 months actually falls in the tax year 21-22. But since the insurance was paid for the year, and the year starts from 5th July 2021, so logically this insurance is paid for the 12 months period, not for the 9 months. So from 5th July 2021, 12 months ends at, actually you can say 30th June 2022. Now a very important point. 12 months period which starts from 5th July 2021 ends on 30th June 2022. The last 3 months from 31st March 22 till 30th June 22, actually the last 3 months, they fall in the tax year 22-23. And right now we are solving the question for the tax year 22-23. So the insurance which was paid for the 12 months and the time period counts from 5th July 2021, the amount is 420. The 420 amount is for the 12 months period. But out of that 12 months, 9 months actually fall in the tax year 21-22, and we are not solving the question for 21-22. We are actually solving the question for the tax year 22-23. So in the relevant tax year, we'll take only 3 months. Then in the current year, on 1st June 2022, insurance was paid, and which again starts from 5th July 2022, how much? 480. So this 480 is for 12 months. And these 12 months, now look at this. Let's say they have paid the insurance from 5 July 2021 till 30th June 2023. They have paid the insurance from 5th July 2022 till 30th June 2023. And we are right now solving the question for the tax year 22-23. For 12 months period, the amount of the insurance is 480, but out of this 480, we'll take only 9 months. Why 9 months? Because, let me change the color of the pen. We are solving the question for the tax year 22-23, and the tax year 22-23 starts from 6 April 2022 ends at 5th April 2023. So the 3 months period will be taken from the previous insurance, and the 9 months period will be taken from the current year insurance. Now we are actually time apportioning the insurance, that exactly how many months of the insurance they fall in the relevant tax year in which we are solving the question, because we are solving the question on accrual basis. So 480 will take 9 months, 420 will take 3 months. So 420 will take 3 months, 480 will take 9 months. Let me use a calculator. It is coming, dear student, 465. So here comes your property income. 3,600 minus 380 minus 750 minus 465. I'm getting a property income 2005. The property income is 2005. Okay. The property income is 2005. Okay. Another important point. Now let us discuss one more concept relating to property income, one more rule relating to property income. The name of the rule is finance cost. Finance cost relief. Now what is this finance cost relief? Try to understand. There are a few possibilities. Number one, it is possible that landlord of the property has taken loan, number one, and then he bought the property and given that property on the rent. Number one. One possibility, someone takes loan, buys the property, gives the property on rent. Obviously, the loan was used to buy the property, and on that loan, this individual will have to pay the interest. Interest means finance cost. But that finance cost will not be deducted while calculating property income, rental income. Now the question arises, sir, if we have taken the loan to buy a property and then property we have given on the rent, so actually we are paying interest. Yes, we are paying interest. So why we are not deducting even though the loan was taken specifically for the property? So now the question arises, and this individual is paying interest as well. So why we cannot deduct the finance cost from the property income? That's a rule. But you will get finance cost relief. How will we get finance cost relief? I'll come to that. But just first thing, try to understand. While calculating property income, we never deduct finance cost. Okay. Second, it is possible that individual has taken the loan to buy a property. Second possibility, it is possible individual has taken the property to incur any capital expenditure. And third, it is also possible that landlord has taken the loan to just do repair work on the property. So either the loan was taken to buy the property which is given on the rent. Second, either it is given for incurring any capital expenditure. Third, even the loan was taken for repairs for revenue expenditure. In any one of the cases, the finance cost relief will be available. And how do we take that finance cost relief? I'll explain this in a while don't worry at all, inshallah. But I just want to tell you, if the loan was taken even to buy the property which is on the rent property, then property was given on the rent, or the loan was taken to incur capital expenditure on that property, and finally the loan was taken for even repairs on that property which is on the rent right now, finance cost relief will be available. Actually, what finance cost relief does, it reduces your income tax liability. Finance cost relief reduces your income tax liability. How it reduces? Let me just make a format. Assuming somehow you have managed to calculate the income tax liability. I'm just assuming, okay? Assuming the income tax liability is £20,000, just an assumption. Less the finance cost relief. How will you calculate finance cost relief? I'm assuming the interest amount. All you need is take the interest amount into 20%. This 20% is fixed. You will deduct the finance cost relief, and the final answer will be tax payable. Income tax payable. So all you need is just take that interest amount, finance cost amount, multiply that with the 20%, and whatever comes, deduct that amount from the income tax liability. You will get income tax payable. So let me repeat. You cannot simply deduct the finance cost while calculating the property income. All you need is first calculate the income tax liability, and from that income tax liability deduct the finance cost relief. Now let us do a question on this finance cost relief so that you should get a really good idea what I really want to say. Again, leave this illustration. Finance cost. Okay. Calculate what it says. Lydia's income tax liability after reliefs for the tax year 20 to 23. Okay. Lydia owns a residential property that she lets out for an annual rent 15,000. The annual rent for the whole tax year is 15,000. During the tax year 22-23, she paid the following expenses. Agent's fee was paid £1,000. Insurance was paid 1,500. Gardener cost is 1,300. Look at this. Interest cost on loan to acquire the property is 7,500. On this 7,500, you will get finance cost relief. During the tax year 22-23, Lydia also has trading income 50,000 and the bank interest 800. We need to calculate income tax liability of Lydia. Okay. Let us first calculate property income, and then inshallah we'll be calculating income tax liability for this. Let's first calculate property income. Lydia. The annual rent is 15,000. We will deduct agent fee. Insurance paid. Agent fee is 1,000. Insurance is 1,500. 1,000 and 1,500. Then we have gardener cost. Gardener cost is 1,300. Gardener cost is 1,300. Gardener cost is 1,300. We have taken agent fee, we have taken insurance, we have taken gardener cost. That's it. We'll get the property income. Let me use the calculator. Here comes your assessable property income. 15,000 minus 1,000 minus 1,500 minus 1,300. The property income is 11,200 and property income is a non-saving income. Non-savings income. We have saving income. Finally, we have total. Let's take the property income which we just computed. Property income is 11,200. They have given us the employment income as well, which is I believe 50,000. Or trading income. Sorry, they have given us a trading income. Obviously, trading income is a non-saving income. 50,000, interest is 800. Trading income is also the example of non-saving income, which is 50,000. We'll take interest income, 800. Let's calculate net income. 61,200 and 800 becomes 62,000. Okay. Person house obviously will be deducted from non-saving income 12570. Here comes your taxable income. 61,200 minus 12570. 48,630, 800. 49,430. Now let us calculate tax. Obviously, first we need to tax non-saving income. Basic rate band, non-saving, 37,700 into 20%, it gives me 7,540. Higher rate band, from 48,630, you need to deduct 37,700. Because out of this 48,630, we have taxed 37,700. 48,630 minus 37,700. I'm getting 10,093. 930. I'll take 40% of this. It is 4372. Now we have to tax interest income. Obviously, starting rate band is not available. It is already utilized. Because whenever this answer, the taxable income in the non-saving column is either 5,000 or more than that, then starting rate band does not come. Now obviously on it is 800 is a saving income. We have to look for the nil rate band. Look at this result, 49,430 means this individual is a higher rate taxpayer because the total taxable income is more than the basic rate band. Whoever is a higher rate taxpayer, that individual gets nil rate band of 500. So nil rate band, saving income, 500 into 0% is obviously 0. The remaining 300 out of this 800 obviously falls in higher rate band. $120. Here comes your income tax liability, 7540 plus 4372 plus 120. I'm getting 12,032. Or you can do one thing. Instead of doing this, otherwise you will get confused. Simply now deduct finance cost relief. Finance cost relief. The interest amount is 7,500, which is given to us into 20%, which is 1,500. So simply you will get income tax payable or income tax liability. It's the same thing. Income tax payable. So let me use the calculator. 7540 plus 4372 plus 120 minus 1,500. Dear student, I'm getting income tax payable 10,532. The income tax payable which I'm getting is 10,532. Okay, let us discuss the last concept of today's lecture. Property income is very small. Inshallah, in the next lecture, your property income will be completed. Don't worry at all. So let us discuss the last concept of today's lecture. It is possible. The name of the concept is lease premium. For short-term lease. Short-term lease means the time period is less than equal to 50 years. Short-term lease means the time period is less than equal to 50 years. Now the question is, what do you mean by lease premium? Now listen and listen carefully. It is very much possible that your property is on a very good location. Okay. If your property is on a very good location, then it is possible. Along with the rent, the landlord might ask for the premium also. Tenant pays the premium only once. Okay. But the point is, again, why someone will pay the premium in addition to the rent? Number one, premium is paid only once, and it will only be paid and it will only be asked by the landlord if the property is logically at a very good location. Okay. But right now, nobody is asking even in tax and ATX that why someone pays the premium. I'll just try to give you the reason behind the premium. And premium is non-refundable. All you need is you need to understand the tax treatment relating to the lease premium. If the landlord is receiving the lease premium for short-term lease means less than equal to 50 years, then how do we calculate taxable amount on that lease premium? So you will take the premium, whatever the premium amount is, less the relief. How do we calculate relief? It is 2% n minus 1 into premium amount. Simply deduct that. You will get taxable premium, and taxable premium will increase your property income. For example, the lease term is 40 years. And the premium someone has received the premium is 40,000. We are just required to calculate taxable premium. Assuming the requirement is calculate taxable premium. How do we calculate taxable premium? Just take the premium first, which is 40,000, less the relief, so that you should get a relief also. 2% n is this 40 minus 1 into 40,000. So let's see what is the amount of the relief. It is 31,200. So from 40,000 I'll deduct 31,200. So the taxable premium is 8,800. Dear student, taxable premium is 8,800. And simply this taxable premium will be added in the property income. This taxable premium will be added in the property income. This taxable premium will increase your property income. Okay. So dear student, there are few concepts left or few rules left in property income. Inshallah, we'll complete in the coming lecture. So I don't want this lecture to be very long because 48 to 49 minutes, that's a good amount of time. So simply, dear student, I would say thank you very much watching this lecture. Have a nice life.